Welcome to the Advanced Investor Alliance podcast, where investors achieve their full potential through real and authentic content. This podcast is to inspire you to go beyond the mediocre results of the masses.
All right, we're on episode number 3. That's right, Advanced Investor Alliance. Truly excited that you're willing to listen to this podcast. There's so many podcasts out there in this world of the internet, but our podcast is going to be wonderful. Oh, you such high standard, Stephen. Yes, I did. One thing is wonderful. I'm not going to talk as much. I have my partner in crime. I wouldn't say crime. My co-host, Zach Lorenzen. Hello, sir.
Hello, everybody. Good to be here.
It's just so slow and soft. Come on, man. We're going to have to get the man card rolling. I got my partner over here. He's on the podcast. And why? And who is my guest, you may be thinking? Good question. It is Brandon Hicks. And I'm not even going to tell you anything about him because I want him to do that this time. I know if you may have heard Brandon before on my Savvy Investors podcast, hey, it's a treat. You should go back and listen to it. But our objective here on Advanced Investor Alliance is to get you as much information, content, fear-smashing success from human beings that are doing commercial real estate every day. And so without further ado, hello, my friend, Brandon.
Hello. Thanks for having me on.
All right. So let's get down and dirty. Where are you from? And give us a little background. Like, were you in single family before? You've always been in commercial. Tell us a little bit about yourself.
Okay. So I'm based in Avila, Indiana. I've always lived in Northeast Indiana. I did start in residential. In 2007, I bought a small commercial downtown style building, and I bought it specifically for a real estate brokerage that I was part owner of. I was a part-time realtor back then, and so that was my first investment. It was a commercial property. From there, I ended up buying a couple foreclosed homes, and then the subprime loan crisis really took hold. Banks kind of changed their lending standards because I was doing ARV loans back then, which if people don't understand what that is the bank was lending me money based on the after repair value of those foreclosed homes. So they stopped doing that. I took the next few years and learned creative finance, and I started buying small multis with a few houses sprinkled in there. So from mid 2011 till mid 2016, I went from 4 units to 64 units, including a 12 unit and a 16 unit apartment complex. All creative finance, mostly land contracts or contract for deed as they're called in some areas of the country. I was self-managing everything, and quite frankly it burned me out pretty quick, So I took the next couple years and just kind of focused on restructuring debt, just positioning myself for the next phase, not really knowing what that would be. And 2019 is kind of when I started my commercial journey. I sold a handful of properties, paid more debt off, refinanced some others, and put myself in really good position to just be able to take some time, network with people, and that's how the partnership that I'm in now was born. I first met Logan Zuber. He was a beginning investor, and he and I, we just had a lot of conversations. He initially reached out to me trying to buy one of my properties, and I kind of blew him off, but we continued to chat. I recognized that he had skills I did not, so we decided to partner up and go after commercial assets. And at that point, we didn't know what we were looking for. We were looking for anything and everything that would make sense. It just so happened that our first 2 properties we bought was it was a package of 2, or the first really good deal that we found. It was a package of 2 storage facilities in Angola, Indiana, not far from where we live. And once we found that deal, I told him that we needed to bring in our now 2 other partners, Corey and Macy Herr, because they had originally got into real estate wanting to buy storage, but because of their W-2 jobs, just never could find a deal. They ended up buying some single families and some small multis. Storage can be harder to find. You got to do a lot more direct mail, cold calling, etc. So we found those two properties, bought them together. Each kicked in $25,000 for the down payment. Purchase price with $390,000. Very basic transaction. Immediately went in, started pushing up rents, and we realized right off the bat the partnership worked really well. So that was in, kind of rambling here, but that was in June of 2020. We ended up buying one other property later that year, but since then we have bought a total of 14 buildings together, or different properties. We've sold 3, and we have 2 closing next week that we are selling. And kind of our general premise at this point is to buy underperforming self-storage properties and improve their NOI, flip them, and then 1031 the profits into something else, with more runway.
So real fast, I know Zach, I know you want to get into that. How did you get into creative finance? How'd you learn about that? Was that out of a desperation? Was that like, who introduced you to that, and how'd you learn creative financing?
So it was definitely out of necessity. I did not go to college. I was a $14 an hour factory worker at that point. When the banks turned me down, it was like an ego hit, because I've always had great credit, never turned down for any kind of loan up until that point, And so, like I said, I took a couple years and just kind of figured out how to do it. And I spent a lot of time on, before Bigger Pockets, there was a forum called CRE Online, Creative Real Estate Online. Like one of the big names back then was, and I'm drawing a blank right now. I'll think of it at some point, but I spent a lot of time in those forums, learning how to structure deals. Mostly commercial is what the discussions were back then. I read a lot of books, listened to a lot of podcasts.
So on the creative, getting rejected as a loan, and a lot of people think that way in commercial, right? Because it's bigger numbers, and you kind of have to be established. Did you find that creative financing gave you hope that you could do it each time that you were on these forums and you saw other people's deals, or you felt like it was necessary? What was, like, did you ever think like that it could happen? Because a lot of people think, yeah, I hear about these creative deals, but I never see them. Like,
Right.
What was going on during that process?
So it was financially necessary, unless I wanted to bring in a partner. I mean, my 64 units, I did, that's all me, and I was able to do it because I was leveraging so much, just with very low down payments. Anywhere from 0 down to 25 or 5,000 down, something like that. And to be clear, on that bank loan that I was turned down for, it was just a $34,000 house. It was a point in time. It was the beginning of 2008, and I took it personally, but my situation hadn't changed. I was not in worse financial situation. It was a bank problem. It took me reading books like The Big Short and another one on the subprime crash to really understand what was happening at the time that I was rejected. And I didn't read those until a couple years down the line.
Yeah. It's interesting. I love your perspective. It was a $34,000 loan. It's crazy that you say that, because it struck a chord with me. When I started, I got denied a $14,500 loan.
Yeah, it's crazy.
From a bank. Yeah, and seeing the last acquisition that was $1 million, it's fascinating. All right, Zach, your turn.
I've got a question on your partnerships there. A lot of people are scared of partnerships. You hear all the horror stories. What have you learned to look out for? Or do you have any recommendations towards people setting up a partnership?
Nice.
You obviously have to trust people. You have to know them well enough that you trust them. And fortunately, I met Corey Herr through Bigger Pockets. He lived probably 5 miles from me for who knows how many years, but I met him through Bigger Pockets. And we just started talking real estate. I actually sold him his first property, sold him a few more later on, and then of course met his wife Macy. Was at their wedding and all that. So I knew both of them well that standpoint. I knew I could trust them, and I knew it would be a good fit. Just because we talk real estate literally every day. Never talked about partnering on anything until we found that storage deal, and then it just seemed natural to bring them in. With Logan, kind of the same thing. I mean, we chatted for probably about a year daily before we found that first deal that made sense. And I don't know that I have any advice other than, just spend a lot of time talking with people, get to know people. You find out who you mesh well with, It was once I reached out to Corey and Macy and said, hey, we've got this deal, do you guys want to partner? It was an automatic yes. And it was very cool because we went and we had dinner together at our favorite local Mexican restaurant, Don Chico's. And as we were sitting there, I mean, like, we already all four knew exactly what we would be doing in the partnership, where it would overlap. We have complementary skill sets, and it's worked out amazing. So
it was a natural transition. How long has this partnership been going on now?
Since say May or June of 2020.
Wow.
Do you think would it have been harder for you to get these storage units and these bigger assets acquisitions without being in a partnership? Because in single family, you could buy 200 houses, by yourself without a partner.
Right.
How does that differ to commercial?
I think it definitely helps. I mean, could I have gotten that first storage deal on my own? Probably, because I had assets. I could have leveraged them. I mean, I've got a 16-unit apartment complex, that I could have leveraged. But I think, even now, like, we apply for loans and so on together, whether it's seller financing or bank financing. I think it really helps to have four people on the hook. That
true,
and we point that out to
loves
sellers.
That.
Yep.
Yeah, we pointed out to sellers. I'm like, hey, if I get hit by a bus tomorrow, you still got three other people that owe you money.
What an advantage.
Yeah, so it does.
So you've
help.
enjoyed this partnership. Has there been any kind of frustration? I'm in a partnership right now, so it's brand new, and we're trying to figure out, what if you die? What if this happens?
Yeah.
Has there, everything is pie in the sky, right? We're going to buy this deal. We're going to be rich. We're going to have 100 units. I've already noticed in my partnership that's very new, there's a lot of level of communication that I need to be better at, communicating expectations and vision. How do you guys handle those? How often do you connect, or is it already understood? Can you walk us through that process of that internal relationship, that dialogue?
Yep. So we do have a messenger chat group that we chat throughout the day, every day, the four of us. And Corey and Macy still have W-2 jobs, but that's how we do most of our communications. We do a Google Meet meeting once a week, one evening a week, where we go over whatever needs to be gone over.
I love it.
We have an operating agreement that covers, the death scenario and things like that. We're constantly discussing about where we want to go. We're all four in a good position where we do not have to pay ourselves from this partnership. So up to this point, everything has just been about growth. And there will come a time where we do start paying ourselves, but we're very growth minded on this, and we want to reach our potential. We've got some really big goals, and we foresee this being a 20 plus, 30 plus year partnership.
It's awesome. It's almost rare, I've seen people they hear the word partnership and they run. And for all my whole life, that's all I've heard is negativity. And I am in a wonderful relationship with my partner on the accounting firm. And I think it boiled down to exactly what you said earlier. What's her skill set and what's my skill set, and how do they complement each other, and what our limitations are. And then it boils down to expectations. So you haven't had any kind of conflict or anything that someone else could be aware of in the future? Like, did you guys have all this outlined in an LLC? Did you guys get going and then formalize everything on your operating agreement? And did someone take that reign? How did that work out?
So with the first property, we first set it up. We set up the LLC to buy that first property. We had discussions, and the discussions were, at that point we had no idea what the partnership was going to turn into. our intention was to not take any cash flow for the first handful of months and just build up some reserves, and then start taking, kind of whatever the property would pay us, reasonably. And then it just kind of evolved from there, just through constant communication. Do we want to do that, or do we want to add another property? Do we want to continue to grow and push this down the road a little further? And probably 3-4 months ago, we really got serious about what does it look like when we pay ourselves? What metrics do we need to get to? And part of that was pushed along when Logan joined GoBundance, because they were asking those questions that kind of forced us to it's like make a plan, and
the GoBundance, that's that book, right?
Tribe of Millionaires, maybe.
Yeah, I love that book. Yeah. Well, we'll get into that another day. All right, Zach, I know you're messaging me here. What's the next question, sir?
Well, with being in the storage units, can you give us a little bit insight on that class of investing? How did you? What made you get into it? What are you liking from it? What are you disliking out of it?
Okay, so getting into it, I mean, like I said before, we were trying to be opportunistic. We were looking at strip malls. We were looking at storage, whatever we could find. And when we found that deal, it was I found it on a cold call. It was a 12 cap, so it was a no-brainer that we needed to get that thing done.
Yeah, no-brainer.
As far as storage, I mean, what we're really looking for is we're looking for an underperforming asset. We're looking for mom and pop type management, where they're not pushing their rents, they're under market, they're maybe they don't have a website, you can't rent online, distressed potentially physically, but it doesn't have to be. I mean, we've bought some that have been, they were managed well from the bookkeeping standpoint and the maintenance standpoint, but the rents were well under market, if that makes sense. So what we like about it is when we find those kind of deals is, we can go in, we can put a website in place, push the rents up, keep the occupancy up, and you just add a ton of value. Before we got on, Steve mentioned the deal we did out on the East Coast in South Carolina. We bought that one with 15 of the 68 units vacant, and market rents were well above where that operator was renting units at. So we went in, put a website in, got the units filled up, because there was demand. She just didn't have time to meet with people to sign the agreements and stuff. So the units filled up quickly. We pushed rents, and we continued to do so over a year. And we put it on the market, and we were able to sell it for $800K, and we'd paid $360 for it, a year before. 15 months before or something. So with storage, we can add a ton of value.
Did you 1031 out of that too?
Yes, and it wasn't a completely successful 1031. I can go into that if you want.
I'm just in the middle of drama in my own 1031. I would love for you to elaborate on the 1031. So, ladies and gentlemen, if this is your first time tuning in, a 1031 is a way to have tax deferment. You're always going to pay tax. That's what the IRS wants you to burn into your brain. But you can pass on this burden of tax to a future time, date, year, death, whatever. But you buy an asset for $100. You say you make $50,000. You can parlay that $50,000 of gain into a new asset, and that's what a 1031 is, real down and dirty. So tell us about your so you bought it for how much? You sold it for $800, and then you had a gain of what?
So we bought it for $360, sold it for $800, and after all the dust settled, we had a $90,000 down payment in there of private money. So that also kind of got thrown into our 1031. So we had like $475K that we needed to place, and we needed to buy an asset, worth at least $800,000. We ended up finding an industrial building in Franklin, Kentucky for $725,000. It's a 34,000 square foot vacant building, slightly distressed. We've had to do some cleanup and so on. But we used the 1031 money along with some other cash and just paid cash for it. And I say that we've kind of screwed that 1031 up because it's only $725,000 and we needed to spend $800. So I'm not sure what our tax implication will be on that yet, but it wasn't a perfect 1031. Does that make sense?
Yeah, but my understanding is it's going to be just that 75,000.
Right. Yeah.
You'd be paying tax on.
I'm assuming.
Again, I'm not a 1031 expert. If anybody wants to be on the show, this is 1031. Please reach out. It sounds glamorous. I just don't like people throwing around terminology like 1031. And they seem like an expert, but the more I dive in, this is my very first 1031, and it was a giant cluster of disaster. And I'm just thankful that you're honest. Like, you don't know, right? You but everyone says you should do 1031. It's a tax-free lifestyle. Would you do 1031 again?
Yeah, so that was our second one. We're actually in the middle of another one now. We have 2 properties identified, not under contract on either one. The 2 properties that we're selling next week, which is the Angola, the 2 Angola storage facilities that we originally bought, that's also going to be another 1031. Like I said, our goal is to roll profits into bigger deals or single tenant industrial that's easier to manage, because we know we've got a handful of those. But just to make sure I answered all your questions on storage, I mean that is our primary goal with storage, is to go in, push the value up, and flip it into something bigger. As far as downsides go with storage, it's management intensive. Even with websites and boots on the ground in other states, handling things for you. There's still a lot to it versus a single tenant industrial property. Mm-hmm. So that's kind of one of our
that's where I like to roll, is the single tenant building, retail or industrial or flex space.
Are you finding?
Yeah.
Go ahead. Sorry.
No, I'm done.
On you mentioned you got this on a cold call, that first one that you did. Mm-hmm. Do you market to these specifically? Are you doing like they do in single family, driving for dollars, or do you Crexy, LoopNet? How are you looking for your deals?
So it's a combination. We do a fair amount of direct mail, both to single tenant industrial and to self-storage. We've bought 2 properties, two storage facilities off of direct mail so far, I think. And then we bought 3 or 4 industrial properties off direct mail. Cold call, we actually have a cold caller right now, and he's bringing us lots of leads. They're just not working out yet. I'm really hoping for him and for us that something connects soon, and I think it will. It's just a matter of timing. But and we bought properties off Crexy as well. The South Carolina deal that was listed on Crexy.
Gotcha. With the way the market is now, interest rates going up, are you noticing people slowing down buying, or is it still going strong? Have you noticed any difference at all, really?
I think the biggest difference is, I can only speak to what we're doing. We are making more seller financed offers on storage facilities. I mean, we have a lot out right now, and it's one of those things where I think I think we all know that the values are less than what they were 6 months ago, right? I mean, we as buyers will definitely say that. The sellers haven't quite come around to that understanding yet. So we are trying to reach their price with our terms. And,
so
it's
old school. I love it. I love your tenacity of just keeping it real. And as I've been in the game for 20-something years, I think that way now. I think I'm going to exit all on owner financed, or all, it's just a better way of doing business. I wish that taboo or that ignorance of the brokers or agents think that it's wrong or negative to be owner financed. And I know in the commercial space, it's a lot more acceptable. Have you had any these letters that you send out, or these creative financing carrybacks or owner finance? Is it what would you say the ratio is of, oh, I get it, to what are you talking about? Is it more, is that true that it's more acceptable in commercial, or what's your feel of the feedback that you've received from sellers?
So we've done 3 creative purchase storage facilities, and we've done 1 with an industrial deal where he carried a second. So we did a bank loan for the first, did a second mortgage for 25% on seller carry. With the storage owners, in general, they're more receptive to it than industrial owners. And I think it's, with an industrial owner, there's really no reason for them to do it. They're already getting mailbox money, right? If it's an investment property for them. For the storage seller, at least they're getting out of the management, and now that they're continuing to get cash flow. I say that, but right now we have an industrial owner who asked us, we're negotiating with him now. He asked if we could pay him off in 3 equal payments. Like, he just wanted to spread the sale over 3 years. And I don't know that he really understood he was asking for seller financing, but that's exactly what it is. We would give him a third down, be our 1031 money plus a little bit of cash, and then we'd do a note mortgage for 2 years with 2 balloons, and I've explained it to him.
A third down is fantastic in his world.
Yeah.
For risk, who's going to walk away from 33%? I would take that deal. Hey, I have a commercial property right now. You can buy it here in Oklahoma City. It's this building that we're in right now.
Yeah.
You got 1031 money, roll it over here.
Right.
I'll even manage it.
We had so we bought this building. It was our second deal together. It was a little building owned by, or not, it was owned by a guy who used to own a furniture store, and right next door they built this building for Sears back in the 80s. And since the mid-2000s, it's had a H&R Block in it. And he had something wonky with his tax situation where he couldn't sell it outright for like a couple years. So we bought it on a lease option in late 2020. And then we finally paid him off, earlier this month, and finalized it. So we actually own it now. But it was kind of a creative lease option structure, which I could get into. But while we're talking about seller financing, we went ahead and listed it immediately after we closed. So we got it with a local broker, and that broker reached out. And the reason we're listing it is it just doesn't fit our portfolio anymore. We're looking at $1 million industrial properties, and here's this little $200K single tenant building. So we listed it, and we've got a potential buyer wanting to get creative and put around half down, and it was a no-brainer for all of us. Like, yeah, we would accept something like that if they write it, So we're definitely open to it on the seller side.
That's awesome. So you mentioned lease option. What other creative tools that you like to use? When I was learning, I started out in creative finance in 1999, so I have a little experience in this area. The 3 offer. Are you still doing? What's your favorite technique? Do you try to buy it with a lease option or an option contract, or you don't want to overwhelm a seller, right? Like throwing all this junk at them, because a lot of people don't know these tools. So which is your favorite tool that you like to present?
Well, to the 3 offers point, we've dropped that down to 2 offers, because typically what we were doing in the past is we were offering what we call traditional. So it's us getting a bank loan and bringing money down, so it cashes the seller out completely. And then we would also offer us getting a bank loan and them holding a second. So it was still 100% financing for us, got them a bigger price.
Right, the 20% is what you're asking for the down?
Yep.
So it's a no money down deal is your strategy.
Right.
If you'll carry it back on the second.
Yep, and we'll
Smart.
pay them
Okay.
a little bit more on price if they do that. And then the third option would be, even higher price than the first 2, but it would be seller financing with us bringing, 20% down, or sometimes less, And we did a couple deals that way.
Were you creative in your interest rates with them, or do you see that these sellers look at the interest rate? Because the old school no interest rates philosophy. I'll give you $1,500 a month for 20 years, and it's
right.
There's no interest.
Doesn't really work anymore.
Yeah, but we've done a little of both, but typically, say up to the last 6-8 months ago, we were writing around 4.5-5% on the rate. Now we're still doing that because we're trying to come up and meet their price. But now the difference in our offer strategy is we're no longer offering that second offer, the seller carry option where they're carrying back the second mortgage, because the problem with that is rates have increased so much on the first that when you throw that second in place, you're not able to meet the 1.25 DSCR that banks are wanting to see.
Cash flow.
Yeah, because we disclose everything to the banks. I mean, if we're doing a seller second, the bank's going to know about it, you know. And for anyone that doesn't understand what DSCR is, it stands for debt service coverage ratio, and the gist of it is for every dollar of debt service, and that's principal and interest, you know. So every dollar of debt service, you have to be able to show that you have $1.25 or more of net operating income to service that debt. And you know, when you're paying 7% on a first and 4 or 5% on a second, a 20-year amortization isn't going to work, you know. Whereas it did, and obviously still you have to be doing a good deal
So
to make it work.
Did you get blowback from banks that when you would ask for a second mortgage from the seller, or banks didn't care? Because sometimes some banks get skittish because now there's two people on that transaction, or two. It's clouded, I guess.
Yeah.
You know, I've seen banks accept it because there's a deal that I did. This guy did a no money down when I sold a duplex to him. Similar, he showed up with no money, and I was like, "How is that possible?" And the bank knew that he was up front. But there's other banks who are like, "No, Class A bank, no, you can't do that."
Right.
Have you felt that blowback? Have you seen that blowback?
We tend to work with, you know, smaller local and regional banks. The only deal that we've done like that was it was an 8,500 square foot single tenant industrial building, not too far from where we live, because we all live in Northeast Indiana. With that one, you know, it was a banker we knew, and he felt good about the building, and we were buying the building at like I want to say like 11.7, 11.8 cap. I mean, really good cap rate. So the bank loan, you know, was a 20-year AM at 3.875, because you know this was back in early 2021, and then the seller's second was a 20-year AM at 4%. So, you know, it was definitely well within where it needed to be as far as DSCR, and so they were fine with it. That means, but it's definitely deal by deal.
You get like right now, I got 2 deals on my table right now. Okay, walk us through the process of, you know, what's most important to you. Is it finance? Is it structure? You have a great partnership, so we know that there's a solid. I'm assuming you're the lead in this because you're full time as an investor, and your folks got their W-2, and they're probably super stoked that you're taking the lead. Walk us through your process of how to tackle an introduction to an asset that's got on your radar.
Okay, I guess I'll speak to the lead point. I mean, we are, you know, we're all definitely equal. I would say that Logan and I handle more of the deal flow stuff because he's also a full-time investor. So with that, I mean, when we get a new lead, you know, if it's storage, Logan he'll set up a deal calculator. One second. We have a spreadsheet, you know, just a deal calculator we can go through and, you know, determine what our pro forma looks like, how it's operating now, what it looks like with the different finance structures. But the biggest thing is that, you know, we like to minimize our risk going in. You know, what's the worst that can happen? You know, how's it operating now? What's it going to look like if we're operating it and we can't improve the numbers? It's all about risk mitigation. And, you know, I can kind of back up a little bit. You know, you ask about the no interest thing, you know, with offers. We've done a couple lease options, and one of them was, it ties into this because it was all about risk mitigation. It was a nearly completely empty 11,000 square foot storage facility in rural Alabama. So it's right outside of Jasper, Alabama. And I actually found it on Google Maps, and there was literally a for sale sign on it. And this is the deal that you reached out to me on Facebook that I posted about. You know, because it was empty, it was a market we didn't know. We were concerned, you know, what happens if we can't fill it up and it doesn't work? So I was able to structure a lease option that would, you know, if it went south, you know, we'd probably only lose, you know, $5-10 grand. So do you want me to go deep into the details of that one, or?
Yeah, absolutely.
Okay.
I can just that was really my original question, was like, what tool do you, and you just brought it up. You went with a lease option first to get into the door,
Yep.
right? Is what I'm assuming. And
Yeah,
then,
I mean,
then it's cool that you found it through Google Earth. I mean, like,
yeah.
yeah, this is great. Please, and then we'll go into your process,
Okay.
of your thinking. But let's finish this deal up. Absolutely.
Yeah, it was crazy that it was on Google Earth, because you just, you can't even imagine how many people were driving by it, because it was on a highway. And this deal, as I go through it, you'll see that it's a home run. So it was, the guy wanted $150,000 for it. It's 62 units of storage, I think, and then it's got like a small 1,100 square foot shop. And, like I said, completely empty. So what we did was we negotiated a lease option where we put $5,000 down. We would pay him as $150,000, within a year, and we would pay him $1,000 a month to lease the 4 storage buildings. He would still have complete control, and he'd have access to that shop building, because he had his stuff in it. We didn't want to boot him out, and try and rent it while we didn't know whether we would buy it or not. You know what I mean? So we went in, fixed all the doors, put cameras in, put a website in place, leased it up, working really well. And the way we structured the payments were, as long as we bought it within that year, that $5,000 option fee and those $1,000 a month lease payments would go towards the purchase price. So when we got, about 10 months in, we went ahead and closed it with private money. So we owed him like 137 or something. And then we turned around and refinanced it, pulled private money out. It ended up appraising really stupid high, like 620,000. And all we wanted,
$150,000 purchased. You threw in some cameras, dialed it up, and it appraised at 625. Hey, that's my middle name.
Yeah,
I want those deals.
and we pushed the net operating income. I don't know where it's at right now.
You cooked the books? No, I'm just playing.
Yeah, yeah. It went from
Performa.
Yeah, I think there was like maybe 5 or 6 units rented when we bought it, or when we first took over, and maybe another 5 or 6 that had to be trashed out. So our occupancy was close to 100% when we had it appraised. So it appraised really high. I mean, it's probably legit worth $450 to $500. The appraiser never actually went to the property. He just talked to me. I gave him a lot of pictures. He used my pictures. It's not a good appraisal. It was fun to show my partners the appraisal, but none of us believe that. So we're fixing it up.
It's so crazy. I just got to pause there. I mean, ladies and gentlemen, boys, and that does happen.
Yeah.
And that just happened. Last summer. The exact same thing happened to me. Not as extreme, not as high, but I pushed an appraisal on a development project I was building for that specific reason. So A, I could sell them. B, I could raise the money. But that's not far fetched.
Yeah.
I'm surprised the guy didn't go out there though. Was it a drive-by?
It was a couple hours away, and he didn't want to drive that far. So
okay, cool.
And it was, and to be fair, I mean, we were only wanting $150,000 from the bank, so
it didn't matter.
It didn't really
it was going to pay. So what you thought it was 400? You really, when you did your analysis, when you got it under contract or this lease option, you just knew that was your sweet spot was about 400. You wanted to double your money to 300, and then put in 20 or 30,000 to double doll it up, put the cameras in, whatnot, get it leased up, have those holding costs. So that's what you're thinking, and then you were pleasantly surprised at 650. Did you have this feeling of keeping the asset and leveraging that equity?
Momentarily, but our intention is to, we're actually getting ready to replace a culvert down there now, just to, make the property drain better. Once that's done, we're going to put it on the market, and we're expecting to exit at somewhere in the 450 to 500K range, and then we'll do another 1031. So, in an ideal world, if it works out properly, I mean, we should be able to take that, $300,000 or whatever, and buy, $1 million asset at a discount that will cash flow, maybe 2x what that storage facility will, and, with almost no management, right? If we buy a single tenant industrial property. That's kind of our thinking.
That is rock star thinking. So it's like chess,
Yeah.
and it just snowballs.
What's your guys' end goal on it? It looks like you're just keep trading up and trading up and trading up. Do you have an end goal at this point, or is it just trading to bigger and better assets?
It's a good question. I don't know that we have an end goal, and our goal keeps changing or whatever as we visualize how big this can get. But our goal right now, it's like our 15-year goal, and I don't know if that 15 years starts this year, or if it was 2.5 years ago that it started, but I think somewhere around 15 years in, our goal is to have about $250 million in industrial assets. I mean, that is our goal.
Cool.
To get there, we're going to have to flip. We're going to have to continue to buy small industrial deals at a discount that we can flip into bigger ones. I think it's completely feasible to get there, because if you look at this deal in Jasper, Alabama, if we can clear $300,000 off of it and go out and buy an asset for $1 million that's really worth $1.2 million, and maybe tweak the lease or something, and then it's worth $1.4 million or something, and then flip it in 5 years, and now you've got a $4 million asset, and you do that a bunch of times, and
It's totally possible, man. I mean, I think here's my question for you. We got to wrap it up here in about 5 minutes, but is this fun for you?
Absolutely. This is
you
monopoly.
thrive. So are you a deal finder, deal maker,
Yeah,
or
so
are you the detailed organizer? Like, what's your passion in this process?
So I enjoy the transactions. I enjoy negotiating with the sellers, putting the deals together, working with the banks, working with the attorneys. I mean, I get the deals done. Logan,
CEO, man.
yeah, Logan is our. Logan does a lot of everything. He manages our storage facilities. He's actually passed that off to a virtual assistant now. He manages our VAs that build our storage lists.
Yay!
Yeah.
Yay!
He's a brilliant guy. He's only 27, so that's kind of his role.
Be a millionaire.
Yeah.
So
hopefully,
before we get into one more thing, so you had this goal, 15 years. I'm not trying to be rude, because I have like 1,000 questions, and it's just it's like driving me bananas sitting back over here like a caged animal. Our two partners, these wonderful people, 27 years old. What's their goal? Do they have a goal to quit their W-2? I mean, I know you were suppressed in your what was it, a warehouse job, right? Seeing where you are now, it's just crazy, right? Like me too. Like I never knew I was going to do anything in my world. What's their aspirations? That you're cultivating them. They have their part into this partnership. Do they ever talk about quitting or grandioso things? Tell me about their train of thinking. Yeah.
So Corey and Macy are both. They both have salary positions. Corey's an engineer. Macy's in management. They both work for the same company. They definitely intend to quit their jobs. Corey will probably be first, and I'm not sure when, and I don't want to speak for him on that point, but hopefully, within the next, say, 12 to 15 months, I mean, we're hoping he's out. As far as their roles in the partnership, they do the books, they kind of overlap a little bit, communications on like lease renewals and things like that.
They do the management, which is you can focus on acquiring assets, and so on and so forth. All right, I have one more question, and then I'm going to leave it to Zach to wrap us up. But here's my last one for me, burning. Are you scared at all for outside of your state, outside of your comfort zone? I mean, a lot of investors that I work with around the world, they, it took a while to articulate that in their world. You seem really natural and comfortable. Do you feel like you have to jump in your car and drive to North Carolina? I mean, how did you overcome the scarcity mentality or having an asset, 1,000 miles away? Tell us your train of thinking. How calm me down, because I'm like, I want to buy more, but I'm scared. How do I do that?
I think for me, it's, having partners gives me all the confidence in the world on us. I mean, between the four of us, we can figure out whatever we need to do. Macy's great at, with storage, the laws are all different, state to state on, when you can lock people out, when you can do this or that. So, she's great at digging in, figuring out all that stuff. she keeps us compliant in other ways. I mean, if we have to have a registered agent for our LLC in South Carolina, like she'll find that. And as far as going to the properties, we typically, if it's local, we'll all four go. But if it's more than a couple hours away, then we send Logan, or we own a couple single tenant subway buildings in Arkansas, and Corey and Macy drove down and checked those out on a weekend. But I think there's a lot of advantages to investing at a distance, because you can't just hop in your car and go fix something. If our
forces yourself to leverage, forces yourself to hire a VA, forces yourself to get out of your comfort zone. Come on, bring it to me, Brandon. Bring it. So we bought this 34,000 square foot building down in Kentucky. Empty, had a bunch of crap left in it from the previous business. The all kinds of landscaping issues outside, just stuff grown up. I found a great guy locally. He's a landscaper. It's the end of the season. They cleaned up all the landscaping, and then they went in and cleaned the entire building out. Now he's got our only keys to the building. Like, this guy has them, and if we need something done, he'll run over there and meet with people, and and we've got it listed for lease. I mean, you've just got to find somebody locally to do the things that you can't do. Right.
Yeah.
I used to invest in Florida, and I was always scared that whole process, and I did find that one person, and I did find that. Yeah. But I was like always in the back of my mind, what if I lose that person? What if? But that asset worked out. It just worked out over time. And I like your philosophy of faith and trust in people, man. Go ahead. Sorry.
I'm naturally an optimist, but I do think it would be more difficult with residential than commercial. There's the tenants have so much more responsibility with commercial. So
true, and they're in their business to make it successful. So if they don't maintain the building, or they don't take care of the blank, then they suffer. They lose revenue. A tenant can just bounce out, go to a hotel, or go somewhere else.
Yep.
I see that philosophy. That's a good point as well. Zach, we got to wrap this up.
Well, you kind of took my question there on getting over that mental hurdle mindset of investing out of state, because everybody's scared about it. So I'll leave it with something a little simpler. What's a piece of advice or a book you would recommend for people trying to scale up and get out of the single family world and into the commercial?
Good.
Probably the best
what
book.
pushed you?
Yeah. I know one of the early books that I read on commercial that I really enjoyed and opened my eyes to the possibilities, because commercial operates so differently than residential. It's basically an NOI driven business. It's worth what the NOI produces, right?
Mm-hmm.
Yep.
So what opened my eyes up to that was Confessions of a Real Estate Entrepreneur by James Randall. It's an older book, but it's a great one.
Yeah, the deals that he did in there. Yeah. Fascinating. Great book. Confessions of a Real Estate Investor.
Is that what it is? Yeah.
All right, man. I know you won't be a stranger to the podcast. I really appreciate your time and being number 3. It's always a good thing. I love being on someone's podcast like they just started it, and it's a legacy. And will never be forgotten. Brandon, we're going to check in with you, and again on your next acquisition, maybe, or I'd love to have you on the show as often as you'd like. You're committed to this game of commercial real estate. It's not a hobby. It's not, I don't like that a lot of single family, they feel like they have to graduate. I think that you can be in commercial real estate if you have the right mindset. You have to have these certain skill sets. You're going to have to know these certain verbiage. You're going to have to know these things if you really truly want to be in the commercial. It's not luck, it's skill, it's time, it's education. And that's what this podcast is about. That's why we started this thing. And you're the forerunner of that, man. And you obviously, and I love your heart towards partnerships. And I hope that a lot of people will reference back to this. Next time you want to do a deal and you want to go bigger, you might need a partner. I love borrowing someone else's credibility. I love, and also returning someone else's success to them that I wouldn't be here today. So appreciate your time. Zach, any final words?
Again, appreciate your time and your wisdom. We've learned a lot, and I'm sure everybody else out there is going to learn a lot from this podcast.
Yeah.
Cheers.
I appreciate you guys having me on. Yeah, thanks a lot. Take care.
Yeah, man.
Thanks for listening to the AIA podcast. Stay motivated by listening to our other powerful episodes at advancedinvestoralliance.com.